Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge, banking awareness part of it, and basically we are discussing on the banking history. We have been discussing about the liberalization era since the last 3 or 2 lectures, okay? In the previous lecture, we had looked upon several facts and figures of the liberalization era. Basically, in this lecture, we are going to continue with the same. Alright, so let's move ahead. So the financial knowledge is the main topic that we are covering. Banking awareness is a part of it, and banking history is a part of banking awareness. We are discussing the liberalization era, but in this lecture, we may start the new concepts adopted by the bank and current scenario. What is the situation of Indian banking right now? Okay. So now we are going to express our views on these 3 topics. Okay, so let's start with the liberalization era first. So after the liberalization, there is a increase in access to the capital market. Now, what is the capital market? What do you mean by it? If I'm saying, just explain me the capital market, how you will explain the capital market to me? So how will you explain the capital market to me? Okay. So let's first start with the term market. What do you mean by the market? Just tell me that thing and then I will tell you how to deal with the capital market. What do you mean by the market? Now do not assume a place where you go with your brother, your mother, your father and whatever the place you are going. Because market in simple terms is nothing but a platform. Already I had explained the market in the economic sections, but now I'm reminding you. It's just a platform where there are 2 kinds of people, buyers and the sellers. The sellers are the person who produce something. Buyers are the person who buy something. Alright, and the place where they meet or the platform where they meet is known as the market. Okay, similar things happen with the capital market. Because it is a market, so there are also 2 types of people called buyer and the seller. Okay, but here is something different. Entire thing is about money management. This is the base of capital market, money management. Okay, so basically if we say, suppose there are 2 persons, Mr. A, who is having rupees 10 in excess, then there is a person, Mr. B, who requires rupees 10. He having the excess, he need the money. Okay, so in this scenario, he is the seller and he is the buyer. Okay, now it a little bit confusion for you. How Mr. A is to be the buyer and how Mr. B is to be the seller? Mr. A is basically having the excess of 10, we understood. Mr. B is basically needing the rupees 10. We understood. How does the relationship establish between them as a buyer and seller? This is to be understood. Okay, so let's start the discussion over it. Mr. B is basically the person who will issue the share or the debenture. Okay, these share and debenture are basically issued on certain interest and return to be promised, like 10%, 20%, 50%, whatever it could be. Okay, then there is a person, Mr. A, who will purchase or buy this share or debenture in exchange of fixed return from the B side on after ever intervals, like monthly basis, on quarterly basis, yearly basis, half-yearly basis, whatever the agreement signed between them. Okay. So this case, that's how A becomes the buyer because he's purchasing, and B becomes the seller because he's selling. That's how the relationship established between them as a buyer and as a seller. All right. So that's how many other sellers and buyers meet in the capital markets. The sellers are the person who need to obtain our money. Okay. And buyers are the persons who having the access of money and they buy the shares and debentures in return of the fixed assets in the form of interest, you can say. Okay. So now I hope you have got a little bit idea of the capital market. To raise capital, many banks access capital markets through initial public offerings known as IPOs and the issuance of bonds. This allowed them to fund their expansions and public activities. Now here is something we need to understand before we proceed. What is the process of IPOs? How is the bonds issued? And why it is regarding the capital market? Alright. So basically when we talk about the firms and the, you can say, any company or organizations formed, on the basis of ownership, they could be divided into two forms, private and the public. Private and the public. Okay. What is the difference between these two companies? It is very, very necessary. If 50% or more, or you can say if more than 50% of shares held by the owner, then it's called private company. Okay. But if more than 50% of shares held by the public, then it's called public company. This is the basic definition. Okay. But if I am giving you some technical definition, then you can say the company which is registered in share market or stock market or securities market, that company is known as the public company. Okay. And the company which is not known as the private company. Okay. And basically there is a condition in opening of the companies. If we talk about the private company, then there must be 2 members to open the company. It is the minimum requirement. And if we talk about the maximum, then 50 to 200 maximum person could be included in the private company. Alright. And because this company is not registered with any stock exchange and the securities market in the country, that's why there is only capital invested by the members. Okay, because the general people could not buy the shares and the capital rights of this company because it hasn't been registered in any stock exchange. Okay, this is a kind of private company. But if we talk about the public company, then for public company, there must be at least 7 members required to open the company. It is minimum. But for maximum, there is no limit. There could be any number of members of the public company. And because the public companies are registered with the stock exchange, so they could invite capital from others, or you can say general public, by issuing their shares and debentures to the public, which could only be issued in the market known as the capital market. Anyone who is fulfilling the criteria and having the amount could buy their shares. Okay, but in the case of private company, because it is not registered in any stock exchange, so no one could buy their shares. All right, and that's why entire rights of management of private company rest with its members, because no outsider could participate in the company's management. How they don't have any shares and the liability with the company. Okay, but when it's come to the public company, then management rights rest with the company's management, which liable to shareholders. However, the company having the professional management team to manage its affairs, but they are liable to shareholders because they had arranged their money. All right. Suppose there is a company XYZ which launched its shares, and they said they will give me 15% interest on it, and even their share will rise up further. That are the promises made by XYZ when I purchase their share. Okay, so now the XYZ management is liable for me to fulfill their criteria to give me 15% interest on monthly basis and to ensure their share price rise up. Okay, because right now I have invested my money in their company. All right, so this is the concept of private and the public company. I hope that you have got it. Now come to the initial public offerings, IPO. Basically, IPO available for private companies when they want to invite more funds from capital market. Because the private companies haven't been registered in any capital market, security exchange, share bonds, so that's why their shares and their stocks are not available for the general public. But when they let it general public to buy their shares, it is known as the IPO. And how it's work? Just take an example. Suppose rupees 50 lakhs is the fund available with the company ABC. Okay, they require total 150 lakhs for their projects and for their functioning. Okay, it means that they required 1 crores extra amount Okay, but they only having 50 lakhs with them. So that's how they could do two things. First, increase the capital, or second, make the IPO. Two options rest with them. Okay, if we go with the first option, it means that 50 lakhs they having, and suppose they having 5 members and they had to arrange 1 CR. Instead of inviting the general public to invest in their company, these members started increasing their investment, like 25 lakhs, 25 lakhs, 20 lakhs, 10 lakhs, or you can say 10, 10 and 5 lakhs. This is the money invested by or increased by every member. So it stands out 1 crore. Sorry. 25 lakhs, 25 lakhs, 50, 75, and the remaining is like this. $25, $25, $50, okay, $75, and then $25 once here. Now they had arranged the 1 crore. They already had 50 crores. They arranged the 1 crores by increase their capital, and then they arranged the 150 lakhs or 1.50 crores without inviting the funds from the public. Okay, this is called the internal increment or increase the capital what they have. But suppose if the company members are not able or not willing, there are two conditions. First, they are not able to increase the amount, and second, they are not willing to increase the amount and they want the general participation of the public. In this case, they could issue the IPO. That is called the initial public offering. And why it is called the initial public offering? Because when the company was registered as a private company, then the access to their capital and their management was limited to their members only. Because they are the person who invested in the company. But when the shares launch in the capital market, then it means now the company invited the public to come and invest. So this is the first time or initial time, and this is made to the public. So it is known as the initial public offerings. Means for the first time since after the incorporation, the company has invited the general public to buy the shares of the company. Okay, for this scenario, what's the purpose? Like suppose the ABC requires 1 crore. Okay, and for this they launch 10 shares in the market with rupees 10 lakh each. Okay, so this is the IPO. 10 shares launched by them in the market, and this is the IPO price. Alright, that is the purpose and that is the process. And who authorized the company to come to the market or capital market and launch their IPO? In the key national institutions, we had discussed about it. That is the Stock Exchange Board of India. Right? Which was established in the year of 1988, and in the year of 1991, it was declared as a statutory body. So SEBI is basically the apex institution which will authorize ABC to launch their 10 shares in the capital market, and then the persons who wants or who interested in ABC could purchase their shares, and that's how the money will arrange for ABC. Okay. Now, here I would like to tell you the conditions of launching IPO. It is very, very important. Conditions of launching IPO. What are the conditions? The first condition, company must be doing business or must be operating for at least 3 years. It is the first condition. Second condition, out of these 3 years, 2 years must be of profit is the third condition. Now the fourth and the last one is that the company at least launch 25% of shares to market. Okay, these are the 3 basic conditions of launching IPO. First, the ABC, which is launching their IPO. ABC, they must be in the businesses or must be operating for last 3 years or for 3 years at least. Okay, since if they invest established in 2019, so they must be operating from 19 to 20, from 20 to 21, and from 21 to 22. For 3 years must be they are operating. Okay, it is the first scenario. Second is that out of these 3 years, 2 years must be of the profit. Means from 2019 to 2022, at least 3 years. Like this. At least 3 years must be the year of profit earning. Okay. And the last condition is that at least 25% of their value, of the company's value shares, must be launched in the IPO. Okay, it doesn't mean that you could only launch 5%, 10%, 20%, 15%. Okay, no. At least 25% of the company's value shares must be launched in the market. Then only the SEBI will allow you to launch the IPO. Okay, so now I hope that you have understood the IPO properly. Alright, now what is the implication of IPO on the banks? Suppose this is the bank ABC. Now they having 50 lakhs. They required 1 crores. Okay. First condition is that internally they could raise up the capital. Okay. Second option is that they could attract the deposits of 1 crore so that their capital could increase. And the third is that they could launch their earnings. Like we had discussed, there are 3 options for it. First is they increase their capital. Second is that there is a increase in deposits held by the bank. And third is increase in income. If these things happens, then why should bank will launch the IPO and shares, and why they take a liability to the shareholders? Okay, it could only happen if all these 3 options, and after assessing these 3 options, still the bank is not able to arrange 1 crore. Then they will divide the 1 crore into 10 shares of 10 lakh each and launch into the market. Okay, that's how the bank will get 1 crores from the market, and the total operating capital or working capital will be at 1.50 crores. And that's how the bank could use its money and expand their businesses. So increase access to the capital market. That's how it's helped to the businesses or banks to expand their business and other activities. Okay. Thereafter, enhanced customer services. With increased competition and the use of technology, bank focused on improving customer services and convenience. Just take an example. A, B, and C. There are 3 banks operating in the market. Okay. But after the liberalization, D, E, F, G, H, I, J, K, L, M. Now you can see how many banks entered into the market. So A, B, and C and other banks also, they will felt a feeling of competition and they start improving their service conditions so that they could attract more and more customers. And this will be beneficial for economy and the consumers. All right. As long as the competition is healthy. All right. They introduce innovative products and services such as the mobile banking apps like PhonePe, Paytm, Google Pay we are using today. Personalized wealth management solution. It means that you could avail various banking services provided to you, okay, for managing of your wealth. And second is cater evolving customer needs, like personal loan related you can get, credit card related queries you have, you can got your solutions, okay, house loans you required, you can got your solution, business loan, study loans, whatever kinds of loans you required, you can got it, okay. In summary, if we summarize all the things, the liberalization of Indian banking sector not only expanded the choices available to customers, but also made the sector more robust, competitive, and technological advanced. Means, from the customer point of view, when I had only 3 options, A, B, C, now I am having D, E, F, G, H, I, J, K, many options I have. So it's not only benefiting me, but also the sector, as some of them got merged together, some of got consolidated together, some of got acquired, and that's how they became a robust entity. And this is beneficial for the economy because it enhanced their capacity to operate as a bank. And even their competition leads them to customer-centric progresses and technological advancement. And this played a significant role in the transformation of India's financial landscape. Because prior to it, when we were suffering due to the collapsation of the banks, poor performance of the banks, financial exclusion to the people, now we having a better condition of the banking system, financial inclusion, and various other things. All right. Now, if we talk about the new banking concepts which has been introduced in India, in recent years, India has witnessed the emergence of new banking concepts such as payment banks, small finance banks, and digital banking to promote financial inclusion and technological advancement in the banking sector. Okay, means the banks which are generally related to accept the deposits and grant the loans. Okay, and they do not have a diversified options for their customers. In the recent times, we had seen other functions of the banks also. Like there could be the banks which are only for the payments, banks which are only for the small finance, digital banking we are seeing. Okay, about all these kind of things, we will have a discussion in the upcoming lectures. Till then, just remember they are one of the most technical advances we are seeing in the banking sector. And these are often known as new banking concepts or the concepts of modern era. Okay. Thereafter, if we talk about the current scenario, India has a diversified banking sector comprised of public sector banks, private sector banks, foreign banks, cooperative banks, and regional banks. So let's just have a look over these kind of banks. If we talk about the public sector banks, then mostly they are owned by the government by acquiring more than 50% of shares. Okay, so that's why they are known as the public sector banks. Whereas if we talk about the private sector banks, okay, so they are owned by the private players by acquiring more than 50% of shares. All right. Thereafter, if we talk about the foreign banks, these are the banks which are of foreign country origin. Means they are registered in the foreign state. Okay. If we talk about the cooperative bank, then these banks are basically established by contribution of individuals. We will have a discussion of the cooperative banks also in details. Thereafter, finally, if we talk about the regional rural banks, regional rural banks, RRB in short, then these banks were introduced in the year of 1975 in India, basically liable for development of rural areas of their particular region. Wherever they establish, they are required to ensure the financial well-being of the people of that rural areas. So this is the current scenario of Indian banking. All right. So students, basically in this lecture, we had done with the basic introduction of the banking history. Okay. In the next lecture, we will continue with the banking history, but we will have a discussion over more details on the banking history. Till then, just revise all the facts and figures we have discussed in this lecture and prepare yourself for the next lecture. Okay. So with this note, let's end this lecture and thank you.